Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, January 11th. Great to be you guys in the room. I saw most of you yesterday, but good to be here. Aurelian, good to see you guys. So it's an interesting start of the week. We got a tight move, but there are some key setups that we are focused on. Namely, the name of the game is still seeing if the dollar is going to exhaust off the top side. So on the menu for today, we'll hit DXY, Aussie, Kiwi dollar, gold, and Bitcoin. Dollar yen from yesterday, SPX, a nice rebound off that support. And to look at the Ethereum trade setup, you know, we talked about Bitcoin at support. Ethereum actually came out with the same, an even stronger level, in my opinion. So we'll take a look at that on the downside. And finally, dollar CAD and Kiwi real quick. Not really involved in those, but I do think they'll offer some nice opportunities. Kiwi just sitting at that major support. All right, any other questions or trade setups? As always, feel free to throw them on the message board at any time. Let's get down to business. Here's dollar as it looked into the start of the week. So you guys recall the previous update, again, always provided for you the weekly and daily charts since the start of the year into the close of last year. We've been talking about this 96.50 level, which is key resistance, the high week, or the high close rather, the high weekly close from last year was 96.67. That's still key resistance, okay? Into the open on Sunday, not expandable for some reason here, sorry about that. DXY kind of just looks still. Here's DXY now, okay? Here's the daily chart. Here's the intraday chart. So as you can see, there's not really much to write about yet. We've set a really clean weekly opening range right below the downslope for the near-term decline off last month's high. And we're kind of looking for a near-term break here to give us some guidance. Again, the risk is just for a pullback within the broader uptrend, right? So the monthly opening range is preserved between two key levels. The weekly opening range is preserved right below slope support. There's not really much to do here. Now, this might hold until we get into tomorrow. Tomorrow's highly anticipated inflation, core inflation read is expected to show headline inflation at 7%. Again, multi-decade high. Core inflation 5.4 from 4.9. So lots of the dollar-based crosses that we're looking at today are going to be very contingent on what happens with that read tomorrow. I'm not typically a guy who tells you it's going to be all about this release, but in the environment we're in, where you just got a dissemination from the Fed last week that, man, we might actually be in for more, up to 4 hikes. You got Jamie Dimon on TV yesterday on CNBC saying, I'd be surprised if it was only 4 hikes. So you're getting a fundamental shift in the market's outlook of where interest rates may be heading into the close of this year. You know, we came into the year saying 2, maybe 3. It got upgraded to 4 last week. You got people saying, what, 4 would be short yesterday? This is why the fundamental guys are writing up a storm. For our part, it's all in price. It's all in price. All of that nonsense is still keeping the ranges intact. We're looking for a break of these monthly and weekly opening ranges at key levels here. So keep an eye on this one tomorrow as we head into that release. Any questions on DXY? Okay, gonna run through these pretty quick. Number 2, here's Aussie. Also one from last week that was gonna give us a nice little rebound, and we got the rebound, but it didn't last very long. So if you recall last week's update, here was the last update I gave you as we were heading into the start of the week on Sunday. The whole focus was we broke uptrend support, divergence into downtrend support has us looking for a recovery for inflection off of downtrend resistance. So there's a lot of big words there, but not really much to do. It's really right here. Ty, daily and monthly. Oh, for the DXY, here you go, brother. Here's the DXY monthly. And here is the DXY on the daily. No change to any of the levels that were presented. okay? So going back to Aussie, on the daily chart, again, there is that near-term break of uptrend support, and here's what we've been doing so far this week. So it leaves more to be desired, right? We're not really bullish, we're not really bearish, we're kind of sitting right here in the middle of the range. Longer term, and I'm going backwards here, but here's the Aussie on the weekly chart, okay? So more to be desired, right? More to be desired. End of the day, this is what I'm looking at. Your weekly opening range is set right here. You're slap in the middle, right near your weekly open. So essentially this thing is a doji for the week, okay? Watch for a break of this range heading into tomorrow. Bearish invalidation is 72.26 into 72.21, key range. A break of the lows, if we break the opening range low for the week, you're looking still for that 50% retracement. That gives you 71.35, key support into the 61.8, and that's the 71 handle. So looking for clarity here. I think the levels are mapped out pretty well. We just need a kick in momentum. And guys, this is the quintessential time that retail traders will tend to fall into FOMO. There's a lot of headlines crossing, major event risk on tap. You know, there is volatility within the ranges, but don't get married to a trend. Don't, you know, take a big leap ahead of this release. Patience pays in this environment. Okay, I think we get a lot more technical clarity once we get that event risk flushed out tomorrow. Questions on Aussie? All right, so that is the intraday. Hey, Ty, here's the daily. Again, these are pretty ugly charts for the Aussie on the daily, but there it is if you need it. All right, actually the cleaner of the two is actually Kiwi, and I gave you guys an update on that one as well into the start of the week, as we had just bottomed right into key support. So if you remember the previous update on Kiwi, this was a textbook play. This was published back on the 5th. We had set a really nice weekly opening range to start off last week and the first week of 2022. You know, looked like it was petering out. We got a nice rejection off of uptrend resistance. We were looking for a test of uptrend support, and that's what we got. Got to drop into that 100% extension. That's essentially where we saw ourselves into the start of the week. Here is the update on Sunday. Really nice defense of that support, just lowers the 786 of the advance. So it gives you a nice little support range there. We opened up below the 38.2, and we're still holding this range. So a very nice setup here. In fact, that we haven't really broken anything, and we've defended both sides of the range numerous times already, right? So 2 tests of resistance. This is the 4th or 5th test of support. That's your focus range break for Kiwi. Again, it's one of those trades where it's on a hair trigger. As we said at the beginning of the year, dollars at resistance. It's the same level we talked about into the close of last year. It's the same level we're talking about into the start of this year. So if you do get a pullback, you know, that should basically essentially hold some of these lows that we're seeing in Aussie and Kiwi. If the dollar doesn't, okay, and the higher interest rate expectation is going to fuel the move now, and again, we're bullish dollar long term, but near term, we're at resistance, right? If we do fuel that break, I think this could buckle, and you know, you'd see an accelerated drop in Kiwi. Aussie would risk an accelerated drop towards 71, right? But that's all determined, you know, based on whether the dollar holds and whether this range breaks to the upside or not tomorrow. Okay, so it's pretty clear. It's pretty clear on this Aussie and Kiwi cross what we're looking for into the start of the week. Ty says S&P and NASDAQ got you. S&P's on the list, and you know what? The NASDAQ actually looks good, Ty. I don't know if you noticed. I think it was you who asked in the webinar yesterday. We identified the level of support. That level held right into the open, and we ripped higher, actually. So nice levels there. We'll get to that in a moment. Next up on tap is gold. So one of the other trades that actually looks pretty decent to the start of the week, we talked about the 618 retracement, okay, 1783, just lower, 1776. We're basically looking for a bottoming out here. If the gold trade is going to maintain that uptrend that we've been in from last year, those are the lows that need to hold, right? It's almost very similar if you look at the charts to what you're seeing in Kiwi, oddly enough. Here's gold now. That bounce, that bounce did hold, okay? That key level of support. Here's the move higher. We buckled above the 38.2 yesterday. Here's the 25% parallel, just higher as that 618. And I'm looking for possible exhaustion here today on this thrust. Personally, again, my humble opinion, I'd be pretty surprised if you see gold make a sizable move ahead of tomorrow's release. So 1825, 1830, that's still critical resistance. So don't be surprised here in US trade today to get a little bit of a pullback. At the end of the day, I think it's still constructive well within this formation. Now, if inflation, here's the caveat as we head into it. You can find the math, Michelangelo. Hey, Ty. If the and I don't want to get too into the if-thans and the semantics, guys, but basically what I want to say is if inflation runs like crazy hot tomorrow, let's say you get core inflation over 5.6 or the headline rate over 7.5, right? We're talking, again, these are multi-decade highs. You know, the call that you would think for higher gold would be even more, right? Even more fueled. And at line read with expectation, I think gold's been taking that in stride. And until we get a kick and a break out of this key range, it's absolutely critical. Eman, great to see you in the room. Says sorry for being late as always. No worries. I'm on your favorite asset right now. Let me know if you have any questions. Nice rebound, as we had highlighted on the Sunday open, that we were coming off support, looking for the recovery near the parallel, near that 618. I was just telling them, cautious here. Caution here right ahead of tomorrow's inflation read, man. It's supposed to be pretty critical. Eman says, I am long since NFP print at 1785, cut half at 1802. Well done. Well done. Well played. So heading into the release, 1812 level, I'd cut some more. I don't know how much you have on the position, but break even, okay? If we break below the weekly open, it's problematic, okay? But essentially the weekly opening range lows is at slope. So I wouldn't even wait for a 1783 clip again. If we break below the slope, the objective weekly opening range lows, I think that's your tell, okay? But well played. Don't be too surprised if we get a pullback here today. And in fact, entertain me just a moment. Okay, yeah, don't run with that yet. Any questions on gold? Big day for gold tomorrow. All right. Next up, that's number 4. Number 5, here's Bitcoin. So the crypto sell-off, it's pretty devastating for a lot of people here. I do think the propensity and the risk for a dump lower is there. Just as a disclaimer, I actually bought some more Bitcoin yesterday. I think this was a nice drop. We've been looking for a sizable move back to kind of load up some more. But there might be some pain first. And that's the thing I'm kind of ready for. I'm not really in this on a scalp basis, but this is the September low day close. We talked about this yesterday, 40,596. If this gives way, there's really nothing to like 37,000. So that's another, 4,000 drop from here. That's a basic 786 from the advance off of last year's swing lows. It wasn't actually the low. The low is in January. I think the swing low they made here in June. But an area of which I think we'd start to look for a little bit more support, a little bit more meaningful support. Resistance at 44,000. Breakout is at the monthly open, converges on slope. You're basically looking at like 46,200. Yes, Ty says, I need to leave early. Can you do NASDAQ 100, Ethereum, and silver? Yes, I'll jump into those right next, okay? So I don't really have much to say on the Bitcoin trade, guys. I think this one's like a long burner. If you're gonna get involved here, be prepared that you might hurt a little bit first before you see anything meaningful. But there's been a significant shift both in the sentiment. I think there was an extreme in sentiment that we were coming into the end of last year with. And if rates are seen higher, guys, and especially with all this talk and Jamie Dimon, 4 rates, if this talk continues, yeah, it's going to put a hamper on the broader crypto rally. Okay, if you have higher yielding, just holding, fiat currencies, granted the inflation story is still going to be the driver. It might put a damper on this. A quick look at Ethereum, Ty. So this was something also I highlighted in yesterday's update. So in any event, there's no change. Bitcoin is sitting at that low day close from September. We're looking for a reaction here. This is the 4th day we spent into this region. Here's what it looks like on the Ethereum trade, and I gave you guys this update yesterday. Also one that came into, in my opinion, a little bit more meaningful of a technical barrier. And you guys know I love these confluences. 618 retracement off the low, 100 extension off the high, gives you 29.20 into 29.58. It's exactly where yesterday's low was. Okay, now really loose with the slope work. I've taken my charts, by the way, on crypto off of log. We're just working in regular arithmetic scale at this point, where we're holding prices in this range. You don't need to worry on a percent base per se, but looking at some basic slope action, we're there. So I'm looking for a reaction off this level. Again, another area of interest for possible long exposure if you're looking for entries on this. We're still an overbought on the daily, oversold rather on the daily. And this is something I'm very mindful of. And it just means, guys, that if we do break here, again, likely see an accelerated drop, just like in Bitcoin. Sorry for my late question. A break of last week low, 618 rally at 1783 will let us test 1754 or a more accelerated drop. Eman, about gold, let's take one step back real quick. A break of last week's low, 1783, will let us test 1754 for a more accelerated drop. So yeah, again, my humble opinion, Eman, yeah. If we break 1783, there's a lot of problems with that, least of which that it's a key 618 retracement, which I value and respect. At that point, Eman, you're talking about a clear and definitive break of the monthly opening range, right? You're talking about a clear and definitive break of the broader uptrend that we've been in from last year's low. So 1754 would be on tap. I have this here as like a late extension. If there was some crazy radical volatility yesterday and we were to dip and break and touch that and close back above, okay, I discount that. But yeah, in my humble opinion, 1783 breaks, we're in trouble. 1754 would definitely be a more accelerated move, in my opinion. Does that make sense? Sorry for the reset there, guys. Just wanted to get Eman her question. So back to Ethereum. Any questions on this? So near-term resistance, and I highlighted this in yesterday's setup, is going to be at that 200-day moving average, converges really well in the 75% parallel. And again, very similar scenario, monthly, yearly open, converges on slope. That's your bearish inval. All right, so Ethereum and Bitcoin, both testing pretty major levels. Note that this is at the September low day close. Ethereum is not yet touched its September low day close. Okay, non-confirmation lows, just as non-confirmation highs, okay, of related assets can oftentimes, again, be major pivot points. So something to keep in mind here on the crypto block as we get deeper into the week. All right, so that's number 6. Let's go backwards. Ty wants to look at the SPX. Here's SPX yesterday, okay? We nailed this one, basically. If you guys remember last week, we were talking about 4610. It got deeper than 4610, but not by much. Here's SPX on the weekly charts. Quick reminder, last week we got an outside weekly reversal off of the record high, okay? Oftentimes an exhaustion pump. We've been getting ongoing divergence all throughout last year. And the threat into the start of the week was for a deeper cut. Well, we got it. The weekly chart now is testing, okay, last year's up slope. All of these slopes, guys, are derived from right here. So the original slope, parallel, a parallel, a parallel, keeps everything nice and tidy, Okay, so we just bounced off of uptrend support. Here's what it looks like on the daily chart. Okay, last year's slope, parallel, support, support, stop traffic. 38.2 of the advance off the October low, converged on that. There's 46.10. We bottomed out a little bit lower, 45.90s. Okay, and here's the rebound. Now, we're not out of the woods yet, but as far as the downside concerned, or the downside is concerned on that trade, that's it. 46.10 was our level. We are now looking to assess the recovery, okay? And for the recovery to sort of gain steam, we need to clear the upper parallel of this possible formation. I say possible because the only inflection that we've gotten essentially has been off the median line, okay? And that was the drop. So as we closed out yesterday's trade, we were saying look for 38.2, 46.73, look for a possible test of the slope for guidance. Here's the 38.2 at 46.73. Here's what looks like a possible exhaustion pump. Watch the open of US trade today, okay? Again, I don't think we'll get a major break before tomorrow's inflation read, but all things held constant, we've rebounded off of uptrend support. Near term downtrend resistance is just a bit higher, and this is sort of the breakout zone that you need to clear to validate resumption of the broader uptrend. Now, Ty, for you who asked about NDX yesterday, I mean, you sparked my interest, and we threw this together right on the webinar, on the fly. Did a quick pitchfork off the high, again 100 off the high, gave us a nice little round figure there at 15,351. Not only did we gap into that, that's the open, guys, just in case you have your doubts about technical analysis sometimes. We literally gapped into that zone, intraday dropped, but then we ripped, and we ended up closing the day higher, okay, by 0.14%. Oh, more than that. So where do we go from here? Where do we go from here? Well, initial resistance, Ty, is right where we noted yesterday in the webinar. Here's the low day close for December. Okay, that's 15,627. We're just below it. Look for a reaction there. Near term bearish invalidation. Okay, if the rally surpasses 15,900 on a closed basis, you've not only, let me take a step back, that in my opinion would mark a resumption. Remember, we've come off of uptrend support. This could be giving a descriptive tone to the decline, but if we break through the median line again, I think you mark the resumptive trade. With the same respect, this is still critical. And if you break lower, that's, you know, that 38.2 in my opinion might be just a soft target. I mean, this might accelerate much more dramatically if that were to happen. Remember, a break of downtrend support can oftentimes be the sharpest part of the drop. So a sheer warning there, just looking at this from 1,000 feet. Near term, man, we're at resistance. Ty, look to see how we opened the day with respect to 15,000, was that 627? If we break higher, look for the rally towards 15,900. That's going to be the tell. That's going to be the tell. Any questions on this? I don't have anything on the near-term front that looks telling on this just yet, but we'll continue to track that. Questions? All right, that's number 8, NDX. All right, quick look to number 9. Here is dollar yen. So dollar yen, typically a very strong reactor to US economic data, specifically inflation data. And we've been talking about the fact that last week we ran into a big level at 116. Ty says, can I get the 2-hour again? For NDX, yeah, I got you. Oh. Here's what it looks like on the 2-hour. All right. Okay. Dollar yen. So as far as the dollar yen is concerned, the trade started with a week saying, look for exhaustion. Actually, we ended last week saying, look for exhaustion. 116 was pretty huge. That's the 2015 swing low. Nice pivot in price. We've seen that multiple years. Acceleration on both sides. Converged on the median line last week, and we got a decent pullback from that. Where do we go from here? Two things I want to know. First of all, we're still in overbought condition on the daily chart. On the weekly chart, this can stay here for an indefinite time period, but that's when the market has the most push. So you don't want to get too cute in trying to fade this just yet. Daily chart looks like this. Whoop. Oh, one day. Okay, the daily chart looks like this. And the only thing I wanted to highlight here is the monthly opening range. We just tested it. Here's your monthly open, rally into a high. You test the monthly open, you test the range lows, and that held. So puts added focus. It puts a nice opening range for the month in focus. By the way, dollar yen had a beautiful opening range last month. Didn't break until the 20th, but when it did, you ripped right into the end. Okay, so watch the focus on this specifically heading into tomorrow. Intraday, here's what the focus was. And our last update highlighted that, well, we had come into support, okay, and looking for a recovery from here. That recovery would need to fail ahead of 1580 if this is still heading lower. Here was the release back on the 10th of yesterday. First level, 1580, okay? That basically needs to hold if this is gonna continue to move lower. So looking for an exhaustion here. Again, the weekly and monthly opening range is set. Here's your monthly opening range. Here's your weekly opening range. Look to see if we can't clear this heading into tomorrow. The risk is for topside exhaustion here. Okay, for topside exhaustion here on this rally. Questions on dollar yen? That is number 9. Okay. Last on my list from the FX front is Loonie. This thing has been a thorn in my side. I have updated the charts. I just wanted to walk you through how we're approaching this. Here's Loonie from the weekly chart, okay? Last week was a doji to start off the year. We tested the high week close from last year and failed, pulled right back into the slope and failed, and we closed the doji on the week. Here's this week. So where do we go from here? We're at uptrend support. Remember, I told you on the pullback, the ideal scenario, again, in my world, was for a test of the 200-day moving average, a 52-week moving average, excuse me, the 618 retracement of the rally, basically 2550s would be a nice spot. That still might be on tap, but boy, the last 2 weeks, or the start of this week and last week, has sort of been a wash. Here's what it looks like on the daily chart first. A little bit clearer. Monthly opening range is preserved. Okay, cool. But you also might be putting in, you know, a head and shoulders formation, left shoulder, head, right shoulder. Again, puts the emphasis on a break at the downside. Not only would that be a break of the monthly opening range, but at this point, it would be a break of a basic neckline for the possible head and formation move, which again, the measured move would take it down to 2470. So I think the levels are pretty well mapped out. I think the timing of this one is going to be a little tricky, but I'm either looking for the break, an asserted move below 2626 to see an accelerated drop, or again, in a inflation type of trade tomorrow, if we do rally failure ahead of the high day close, which is just above the 2021 yearly open. So it'd be something like this. 27.24. Last year's open was 27.13, like here, right? So bearish invalidation, obviously at the 618. Oh, something like this. So that's my take on dollar CAD. Actually, now the near term charts don't look all that appealing. Here was the slope that we were following last week. We broke, pivoted on it, and broke back below it. So kind of going to scratch this. Here was the slope off of last month's low, that late month low there. That broke. That's done and voided. So I don't have much here on the near-term slope that I'm looking for. I kind of just want to see how this pans out. Ideally, we get some failure there, and a downside break puts into account that head and shoulders formation, 2470. Questions on Loonie? There's no data on tap from Canada this week. It's all going to be about the retail, the core inflation numbers that we get tomorrow. And then into the close of the week, we get retail sales figures from the US for December. So keep your eyes on that. All right, Aurelian says Euro if time. There is time, and I'm surprised Euro's not on the list today, and you might have been surprised as well. But I just haven't been doing anything with it. It's just kind of been the same trade as the dollar, really struggling to find direction. Again, near term, if you're real tight range trading, you could do it. It's not my cup of tea to start the year though. So let me give you a quick look, Aurelian. Here's what Euro looks like first on the weekly charts. Very similar scenario into DXY, and DXY testing major resistance. Here's Euro testing major support. I leave that 618 on there for reference, but I'm going to take that off there for now. The 1618 off the high, 112.21. That was the low last year. We've been sitting here ever since. So last 2 weeks, again, you're in the middle of the range. You're not near resistance. You're not near support. Yeah, I'm looking for something here. I'm looking for some guidance here. Here's Euro on the daily chart. A couple of different things possibly in play here as well. Wedge formation, triangle formation, consolidation, whatever you want to call it, is still in play, and that's been lasting for over a month, almost 2 months now. So taking a strong stance on either direction, I just don't have it. I just don't have it. I mean, again, gunshot approach, ideal scenario in Mike Boutros's world, we rally, give the dollar the breather that we've been looking for, look for exhaustion off one of these two levels, and then the dollar resumption trade, dollar strength, Euro lower. If the dollar just rips because inflation is way too hot, the interest rate expectation needs to be boosted even more, then maybe we don't get that dollar breakdown. Maybe the dollar just rallies. And if that happens, again, a break of the formation, my problem is you still have to deal with 112.20. This is huge, huge support. Again, Euro on the weekly charts, right? You even have the lows from 2018. I know it's not labeled. It's right here, though, right there as well. So it's a major pivot. It's a major pivot. That's why I haven't really been focused on Euro. I'm always tracking it, Aurelian. I just don't tend to write about too much stuff that I'm actually not involved in. So I am tracking it. All things held constant. Here's your yearly open, your monthly open. You got a very clean monthly opening range intact. It's just there's no, in my opinion, technical clarity on the near-term front to try to get me involved here. As I told you, the trade for me last week was long Euro, and that's kind of was my favorite trade on the entire start of the week as this thing was plummeting. That was sort of my trade. Again, it worked out pretty well. Took out, I think, a quarter here, and I got stopped out into the open. So we're back at, square root. We're back at square one. We got to find a happy medium here for some plays. I don't think you have it just yet. So we'll see if inflation can't get a kick here. All right, that's everything that's on my list, guys. Let me know if you have any other questions or trade setups you would like to review. A quick reference on oil, just because it's going to be something the markets are looking at. The broader trend remains intact. Yesterday, the last 2 days looked like they could have been the start, sort of a butterfly for a pullback. My concern is it's a little stretched, but I'm still constructive on this. You guys know I've been constructive on this for some time. Near-term support into the 77.20s, bullish inval for the near-term advance is going to be at the monthly yearly open. Okay, the 2011 low, you're basically looking at like 75, 74.90 into 75.30, major support. So that's my only defense on crude. If we dump lower, that needs to hold for this stretch to remain. If we pop through 80.40, 83.68, 85, levels are pretty clean as far as the upside's concerned. It just looks kind of stretched here. It just looks kind of stretched already. So something we'll be tracking here on crude oil. Anything else? Yields? Yeah. Yeah, real quick. Here it is. I showed you this yesterday, right? I think I showed daily effects, but the 50, okay, this is the 50% retrace the decline off the 2018 highs. We haven't touched it yet once. 180. I told you this yesterday. Okay, so even though last year's high scratches here at 177, that 50 is at 180. It's exactly what we hit yesterday before turning. Look, this is one of those trades. Again, if we breach, it's going to be, in my humble opinion, likely another accelerated run. Why? Price is in overbought condition already, so that cascade effect is already kind of is built up. If we breach 180, again, 193 would just be a near-term target. Support at 170. If we get below that, again, that's last year's high day close, or not the actual high day close. That was the, yeah, it was last year's high day close. So that's going to be my near-term bullish inbound. And that would, again, give sort of a reprieve also for the dollar rally. So things are at pretty critical levels, guys. If you haven't got anything or you're getting FOMO because you're not holding any positions, sit tight, okay? Things are likely to get really interesting this week as we get those inflation numbers. And again, it's just funny how everyone's opinion and everyone's tone is just shifting. Interest rate expectations just moved real quick. So we'll see if we can't get a kick here in some of the volatility heading into that release. If there are no other questions, I'll go ahead and wrap it up here. Best of luck trading tomorrow. Keep in mind, the inflation is expected to print at 5.4 on the core number. That's going to be the headline read, or the core print. 5.4 is expected. So we're playing the deviation off that. The headline read of 7%, which is already astronomical. Don't get too hung up if that's 7.3 or 7.2. You know, that's the headline. The core is really what we're going to want to pay attention to. That strips out food and energy and really will be more impactful as far as what the Fed's looking at into 2022. Amen says thank you. Good luck for all of us. Same. Aurelian, Happy New Year to you as well, sir. Best of luck trading, guys. I will see you here on Thursday, same time. Cheers.